What if I told you that the man who made $100 million during the 1929 crash and the modern algorithms running Wall Street today are using the exact same playbook? Most traders believe that to master the markets in 2026, you need the newest AI bot or a complex array of lagging indicators. They are wrong, dead wrong. Welcome to the inner circle. Today, we are doing something no other channel dares to do. We are merging the timeless, raw psychological warfare of Jesse Livermore with the precision surgical tools of ICT inner circle trading. This isn't just a strategy. This is the blueprint of the 1%. Narrator. By the end of this deep dive series, you won't just see candles on a screen. You will see the footprint of the giants. You will see where the money is trapped, where the banks are hiding, and exactly when to strike. If you've been losing trades despite following rules, it's because you're playing a game you don't understand. Let's fix that right now. The introduction. The Academy Standard. Welcome back to Jesse Livermore's Trading Academy. You are here because you are tired of the noise. You are tired of retail strategies that work for a week and then blow your account. You are seeking the S-tier advice that separates the gamblers from the titans. Jesse Livermore was the original smart money trader. He didn't have Fibonacci tools or fair value gaps, but he understood price action better than any man in history. He understood that the market is moved by people, and people never change. Fear, greed, and hope are constant. On the other side of the bridge, we have ICT. Modern, technical, and ruthless. ICT gives us the vocabulary to describe what Livermore felt in his gut. When Livermore spoke about pivotal points, ICT shows us liquidity sweeps. When Livermore spoke about market behavior, ICT shows us market structure shifts. Today, we unite them, the big lie. Why your current strategy is failing. Before we dive into the technicals, we must address the big lie that is keeping you broke. The lie. The market is random. Financial institutions, mainstream media, and even some trading gurus want you to believe the market is a chaotic toss of a coin. Why? Because if it's random, you can't be blamed for losing. If it's random, you'll keep buying their useless indicators and monthly subscriptions. The reality, the market is an engine of manipulation. Every move you see on your chart is designed to do one of two things: induce you into a bad trade, stop you out of a good one. Retail traders are taught to look for support and resistance. They are taught to buy when the RSI is low and sell when it's high. Here is the steer truth. The smart money, the big banks and institutions use your support levels as liquidity. They know your stop loss is sitting right under that line. They will drive the price down, hit your stop, collect your money, and then move the price in the direction you originally thought it would go. Jesse Livermore knew this. He called it testing the line of least resistance. He knew that the market had to wash out the weak hands before the real move could begin. ICT calls this a liquidity raid. If you are trading based on indicators, you are trading the past. You are looking at a rearview mirror while driving at 100 miles per hour. To win, you must look at the road ahead. You must understand where the smart money wants to go. Why ICT plus Livermore, you might ask? Why not just use one? Because ICT without Livermore psychology is just a math equation without a soul. You will find the perfect order block, but you will be too scared to take the trade, or you will over-leverage and blow up before the trade hits your target. And Livermore without ICT's modern technicals is like a legendary general trying to fight a modern war with a sword. You need the precision. You need to know the exact candle, the exact kill zone, and the exact fair value gap to enter with a tight stop and a massive reward-to-risk ratio. In this academy, we don't guess it. We anticipate. We don't hope. We execute. The 1% mindset doesn't care about being right every time. It cares about being profitable. It cares about discipline. It cares about waiting for the pivotal point where the odds are so heavily in your favor that it would be a crime not to trade. We are about to go deep. We are going to strip away everything you think you know about the stock market. We are going to rebuild you from the ground up, part Livermore, part machine. Are you ready to stop being the liquidity and start being the shark? If you want to trade like Jesse Livermore, you must first accept a hard truth. The market hasn't changed. The tools have. The speed has. the algorithms have. But the human element? It's exactly the same as it was in 1929. The same fear that caused the panic of 1907 is the same fear that makes you hit the sell button when you see a red candle at 8:30 a.m. Today, we are stripping away the ego. The game is a business, not a casino. Most retail traders treat the market like a casino. They want a quick hit. They want to turn $100 into $1,000 by lunch. They gamble on high leverage, hope for a miracle, and when the market doesn't provide, they blame the brokers, the manipulators, or the system. Jesse Livermore was the first to realize that trading is a profession. It requires the same dedication as becoming a doctor, a lawyer, or an elite athlete. He didn't gamble, he speculated. The 1% mindset. You are not in the market to be right. You are in the market to make money. If you are obsessed with being right, you will fight the market. And let me tell you something, my friend, you cannot win an argument with the market. When you are wrong, you don't fight it. You don't hope it comes back to break even. You take your loss, you close the position, and you walk away. Livermore's pillars of consistency. Livermore operated on three core pillars that, when combined with modern forced ET concepts, become a weapon of mass wealth creation. Patience is your greatest capital. Livermore famously said, "It was never my thinking that made the big money for me. It was always my sitting." In the ICT world, we call this waiting for the kill zone. We do not trade at 2 p.m. just because we are bored. We wait for the London Open or the New York AM session where the volume is heavy and the liquidity is real. If the setup isn't there, you do nothing. You sit on your hands. Most of your losses in trading happen because you acted when the market didn't give you a reason to act. Pyramiding, scaling into winners. Livermore didn't go all in at the start. He built a position as the trade moved in his favor. He proved he was right before he poured in his capital. ICT traders do this with add-ons to their positions once the market validates their thesis. This is how you turn a standard trade into a life-changing trade without increasing your risk. The trend is your only friend. Livermore fought against the urge to short a bull market or go long in a crash. He waited for the market to declare its direction. ICT teaches us market structure shift. When the structure shifts, the trend is born. Do not argue with the structure. If the market is making higher highs, you are a buyer, period. The modern psychological trap. The tilt. We talk a lot about smart money manipulation. But the greatest manipulator in your trading career is you. Look at this chart, visual. A chart showing a trader being stopped out by a wick, followed by a massive move in their original direction. What happens to your brain here? This is the moment of tilt. You get stopped out. You feel cheated. The market stole your money. So, what do? You jump right back in. You increase your position size to win it back. You lose even more. This is exactly what the institutions want. They don't just want your money, they want your emotional capital. When you lose your cool, you lose your edge. ICT's concept of the fair value gap, FVG, is designed to keep you calm. Because when you see the market imbalance, you know exactly where to enter and where your stop should be. It removes the guesswork. And when you remove the guesswork, you remove the fear. Why Livermore and ICT are a soulmate match. Why am I pushing this blend of old and new so hard? Because Livermore gives you the philosophy. He tells you how to think. He tells you that speculation is a business. He tells you that a loss is a tuition fee. ICT gives you the mechanism. He gives you the exact grid to apply that philosophy. He shows you that the pivotal point Livermore talked about is actually a liquidity sweep, followed by a displacement. When you combine them, you stop looking at the screen with anxiety. You start looking at the screen with an edge. You are no longer a trader reacting to news headlines or indicators that move after the price has already gone. You are a sniper. You are waiting for the banks to leave their footprint, and you are following that footprint exactly where it leads. Discipline. The silent killer. I see comments every day. I know the strategy, but I can't follow it. Listen to me carefully. Knowing is not doing. The 1% trader mindset isn't about having a secret indicator that tells you when to buy. It's about having the iron discipline to walk away when the strategy says no trade. In the next part, we are going to stop talking about feelings and start talking about execution. We are going to map out the ICT technicals, define the liquidity zones, and show you exactly how to trade the pivotal points that Jesse Livermore used to build his fortune. We are going to dissect the smart money move candle by candle. You need to be ready for this. Grab your notepad, clear your distractions, and prepare to see the market for what it really is. By now, you understand the philosophy. You've seen the smart money trap. But here is the million-dollar question. When it's time to pull the trigger, do you have the ice-cold discipline that set Jesse Livermore apart from the herd? Strategy is only 20% of the battle. The other 80% is your risk management and your emotional mastery. If you can't control your pulse, you can't control your portfolio. The technical execution. Identifying the kill zone, Jesse Livermore famously said that there is a time for all things, but there is no time to trade every day. In the modern ICT framework, we define these high-probability windows as kill zones. Your strategy will only yield results when the market has institutional volume. Without it, you are just gambling in noise. The London Open, 2 a.m. to 5 a.m. Eastern Standard Time. This is where the smart money sets the initial trap for the day. The New York Open, 8:30 a.m. to 11 a.m. Eastern Standard Time. This is the silver bullet window. This is where the largest expansions happen and where Livermore would have built his massive positions. The ultimate combo entry, step by step, identify liquidity. On the 15-minute chart, locate old highs or old lows. These are the resting stop-loss orders, the raid. Wait for the price to sweep that level. Let the institutions trigger the retail stops. The confirmation. Drop to the 1-minute or 5-minute chart and wait for a market structure shift, MSS. The strike. Identify the fair value gap, FVG, created by that shift. Place your limit order right at the edge of that gap. This is surgical trading. You aren't guessing. You are following the giant footprints left by the banks. The 1% trader risk management code Jesse Livermore made and lost several fortunes. His greatest lesson to us wasn't a chart pattern, it was his rule to keep your losses small. Your goal is not a 100% win rate. No titan of Wall Street wins every time. Success is found in your risk-to-reward ratio, RR, the 1% hard rule. Never risk more than 1% of your total account on a single trade. If you have a $10,000 account, your stop loss should never exceed $100. The math of wealth. If you maintain a 1.3 RR, risking $100 to make $300, you can lose 6 out of 10 trades and still be profitable. Discipline is the key. The retail trader experiences a loss and seeks revenge. They double their size and blow their account. The 1% trader views a loss as a business expense. As Livermore said, the losing trader thinks he has to do something to get his money back. The professional knows he just has to wait for the next setup. The hard truth. Why 99% will still fail here is the cold reality. Thousands will watch this video, but only a handful will execute. Why? Because most people crave instant gratification. They want to watch a video today and be a millionaire by Friday. Trading is not a path to easy money. It is the hardest way in the world to make a simple living. If you are looking for shortcuts, indicators that flash green and red, or get rich quick schemes, this academy is not for you. But if you are ready to kill your retail mindset and embrace the grind, you are in the right place. Summary and the call to action. The closing. Today, we bridged a century of knowledge. We proved that 100-year-old wisdom and 2026 algorithms are two sides of the same coin. We learned that the market is an engine of manipulation. Liquidity is the fuel the banks need to move. MSS and FVG are your entry signals into the 1%. Risk management is the only thing that keeps you in the game. The closing statement. There are two types of people in the markets, those who are the liquidity and those who trade with the liquidity. Which one are you? If you are ready to join the Titans, type I am the 1% in the comments below. Let the algorithm know that this academy is building the next generation of professional speculators. Like this video to support the mission of real financial education. Subscribe and hit that